Joining us. This is so exciting to have really a pretty strong turnout for folks who maybe weren't at Liberty Forum. In a moment, I'll have all the speakers who have joined us here today introduce themselves. But just by way of background, we did this talk with less technical difficulties at Liberty Forum, which is a Free State Project event that we did a couple of weeks ago. And it was really exciting to see how interested people are and how this seems to be like something that the community and folks are ready for. You know, we know New Hampshire has a housing shortage. We know that we want people to move here, and this sort of seems like the cool new way to make sure that people can invest, can get here, and can support what we're doing. So I'm going to actually hand it to Matt first, and then we can go to Kumar and then to Mark. If you guys can just briefly introduce yourselves, that would be a great way to kick this off. And for everyone who doesn't know, I'm Carla Gericke, and I'm the resident idiot.
Thanks, Carla. I'm Matthew Ping. I'm the principal broker of Ledgeview Commercial and Porcupine Real Estate. I've been in real estate since 2007 and been pretty interested in Bitcoin and cryptocurrency since 2011, pretty much. So it's exciting to see the technology starting to move in this manner, that we can actually record title on blockchain and operate businesses on a blockchain. And that's what we're going to kind of talk about today. Mark?
Fantastic. Kumar?
Yep. I'm Kumar. I'm the principal at Standard Management, a asset tokenization firm specializing in various securities and now looking to get into more real estate-based tokens.
Very cool. And Mark, you have so many hats, but you're also the coolest Bitcoin politician in the world.
Yeah, my name is Mark Warden, and I like to tell the story. My first Bitcoin purchase was for a pint of honey at PorcFest. I don't remember the year, but it was for 1 Bitcoin. It was around $9 at that time. So it was some pretty damn expensive honey, but it was good. It tasted really good in tea. And subsequent to that, I've been in and out of it. You know, I learned about it through our group of libertarians and free staters and PorcFest attendees. But I actually sold 2 houses for Bitcoin. First was in 2017. I wanted to prove the concept. So I was the first real estate broker in New Hampshire to have a transaction completed fully in Bitcoin. I did it in 2019. I got a title company on board. So that's where I am. Oh, by the way, I was the first state legislative or state rep candidate in the country to accept Bitcoin contributions to my campaign back in 2012. So we're OGs in this space. I'm not a Bitcoinaire. I've sold some, bought some, and lost a lot through fraud, but we're still going strong. And I'd love to hear this conversation tonight. We're going to hear some really interesting information as well as some good Q&A.
Fantastic. And just literally for the one person who doesn't know me, I am also an attorney and a real estate agent here with Porcupine Real Estate. So while I am the comedic talent for the evening, I hopefully can bring some contributions as well. So we're going to be looking at some slides, and basically I think where we want to start is with some kind of the mission and the goals. And maybe Matt, if you want to kick us off a little bit.
Mark has something to say. Yeah.
Sure. Now, the idea behind this started when we were concerned about the overall big picture is the lack of affordable housing. In fact, lack of housing inventory in general in New Hampshire. This has been an ongoing problem for a number of years, last 2 or 3 years in particular. And more specifically, you know, do we have enough housing to invite our Free State Project friends, our Liberty friends from out of state to move here? We want to make it as easy as possible and facilitate that relocation. So with those objectives in mind, we thought, what are some solutions? And we thought, you know, first of all, we need more housing. We can build housing, we can buy housing, we can buy apartment buildings, for example, and focus on getting free staters and other liberty-loving folks in there as tenants. So I think it's a worthwhile goal for our group here at Porcupine Real Estate and Ledgeview Commercial. Also, let's combine that with what's really cool and cutting edge these days: blockchain, tokenization, cryptocurrency. We've all been involved in that for a number of years. So let's make it even more sexy, right? Let's kill two birds with one stone. So that was our original goal. And I think tonight what we're going to talk about is a solution to all those objectives.
Okay, fantastic. Anything to add?
Yeah, the housing, in a 2003 study, New Hampshire had a statewide housing needs assessment. As far as housing units go, there was an estimated 23,000 units that New Hampshire was short by. And then by 2040, we're going to need 90,000 units. And that takes into account current supply, what's coming on the market, and we're still short by thousands of units. So talking about a DAO, we're trying to create a way to increase trust among strangers, right? So trying to automate this business model. So you can see all the rules on a blockchain, it's fully auditable. You're trying to reduce the risk of fraud and errors. Because you don't want to just give random people your money, right? So like a group of friends, you can get together, but if you're trying to invest, from across state lines or in other countries, it's you really have to know who you're working with. And by going to a DAO, you're able to see how it operates so you can have that trust. So then you can move forward and invest in real estate.
So actually, if one of us could just define what a DAO is for folks like me who may not know. I mean, I do know, that was the one thing. But basically for folks back home, it's a digital autonomous organizations. And to Matt's point, we're trying to make things easier. That is the advantage of tech, and that is the advantage of people like us who want to figure out smart ways to leverage things. Kumar, did you have anything to add on this one?
I mean, to add on the definition, what distinguishes a DAO from, let's say, an LLC or a REIT or any other corporate entity is that the governing documents in a LLC would be the bylaws. In a DAO, they would be immutable, unchangeable, on the blockchain, publicly available for audit.
And that
is, yes, that is the primary advantage of the DAO.
So, and again, just to make it sort of easier from a moment up front, people understand what they're contracting for. And so you take a lot of this, certainly probably there are people on this webinar who understand they've done investments in the past. It can get murky, it's hard, you have to get the meetings. So really, one can think about this vehicle as a simplification in order to get to our goals. Anything else, anyone on this one?
The other primary advantage of tokenization over any sort of corporate structure is that we have an independent level 0 clearing system, i.e., before everything went centralized, I used to be able to give someone $10. They used to give me a stock certificate for whatever firm, no central party involved. Tokens bring that level of level 0 clearing back to our system. And what's great with real estate is this is the first time ever that we are bringing a level 0 clearing system to real estate. You can purchase housing, shares in housing, without having to necessarily go through the county clerk or whatever monopoly has the titling system as its.
Right. So just like you would, buy stock to support a company, when you're investing in a location, you're also investing in that community, in that neighborhood, right? So our goal is to ultimately support New Hampshire, support the individuals here, increase the housing, try to solve that housing need by doing it this way and raising more money. We want to operate it in a similar fashion to a REIT, where what the DAO buys, 75% of it must be real estate related, and the other 25% can be from wherever. and then 90% of any of the income would be returned to the shareholders. So that's what we're kind of aiming for. And the benefit of the DAO is that you can write these rules any way that you want. And then everybody sees on them, everyone agrees on them. But instead of just trusting the operators that they're going to do a good thing, they're not going to run away with your money, you can see it on the blockchain. You can introduce a proposal if you don't like what's happening. So Ledgeview Commercial is a property management company. That's what we focus on. But if the individuals of the DAO don't like how Ledgeview Commercial is running their property, somebody can introduce a proposal saying, hey, I don't like what's going on. Here's why. And then everybody gets to vote on it, rather than just being stuck in the passenger seat, you know, as a passive investor, right? You have more power this way.
Matt, I have a question for you and Kumar to follow up on your comment about the REIT, or Real Estate Investment Trust. How is this different?
I mean, fundamentally, like I said, there is that level 0 clearing mechanism, i.e., you can sell your share of this DAO regardless of what happens in the world, what happens with these clearing corporations, clearing houses, governments, whatnot. And that adds a huge layer of liquidity. In addition, by putting it on the blockchain, we make participating in the DAO a lot easier. How many REITs, publicly traded firms, we all have invested in? We just throw away our votes to whatever custodial corporation, brokerage, Blackstone, whatnot. By making involvement a lot simpler, each individual can get involved in a DAO at a lower cost.
Now, a REIT is also, it's a real estate investment trust, and it has some tax advantages if you are registered as a REIT. We don't want to go that way, ultimately, because a REIT, you are limited on what you can buy. It must be real estate related for the most part, 75%. But say we want to, as a DAO, vote and buy a small business. Right? If we buy a laundromat that is operating very well and making money, why should we be limited on purchasing that because of the laws of a REIT? But mainly that's why we don't want to do a REIT exactly, but we want to operate in a similar fashion.
All right, I think that certainly addressed that issue. When we get to the investment overviews, I think that slide is up now. Can someone, sorry, I'm not sure whose turn it is to talk, sort of lay out a little bit for us what we're looking at and what we think the opportunities are, I suppose.
Well, really what it's coming down to is that there's a lot of people who are going to become very wealthy with Bitcoin, with crypto in general, that I believe they need to diversify, right? So you don't want to put all your eggs in one basket just in case. Real estate is still a good investment vehicle that you can get into. The current economic market is making things a little more difficult. The 7% interest rate to borrow money to buy a home, especially an investment property, the numbers don't work in a lot of cases. So also creating a DAO, you're able to raise money. 100% of the funds that we would raise would be our own, right? We would share an interest. We would not borrow from a bank. We would become our own lenders. So that way we can buy these investments. The next slide, this one here, is just an example of if we were to build a single family home. So it's a one-time cost, right? Takes a few months, build a home, buy land. So if you build it for $610,000 and you can sell it for $678,000, you have a pretty decent return on cash pretty quickly. So if we're all investing money, so the return on investment example on the right-hand side just shows you a breakdown of a few numbers. So if you put in $10,000 of this, you would potentially own 1.6%. and you would get a gain of 1,129. There are a lot of assumptions, right, in running numbers like this. Every real estate investor needs to run their numbers, needs to make certain assumptions, and I'm happy to share that with you after all of this. But the point being, this 11.3% return on cash would not be possible if we're also paying a bank, right? So we're essentially paying ourselves. Now, this could also work for duplexes, to buy them, to rent them out long term. Usually duplexes are easier to build here in Manchester. In other markets, it might be a little different. The existing stock, the multifamilies, the 3 families, the 5 families right now that were built in 1900, those are all very expensive to operate. The maintenance costs on those are about 50% of income, which is significant, especially if you're going to pay 7% on top of that for an interest rate. So there's almost no money to be made in the first few years in the current market. So that's why we're leaning towards building either single families or duplexes, or even buying duplexes that are brand new. Keep those maintenance costs low and allow for easy return. Let me see. So when we're talking about fractionalization, it can go a number of different ways. There's different blockchains that we can use. You could even do it on a Bitcoin layer 2, like Stacks or Liquid, or you can go on Polygon or Ethereum. There's many different options. So we haven't chosen one yet, but we would like to get this narrowed down in the next few months. And what I'd like to do is build something, run it by a few folks, and try to break it, right?
I can help with that part.
And if it works, right, then we have a minimum viable product, and then we can move forward and try to raise money, because we don't want to take anyone's money or Bitcoin until we have a product that's going to work.
I mean,
Go ahead, Kumar.
Just from my business in the tokenization industry, I use the ERC20 chain because it is de facto the largest. Clients are most comfortable with it, and chance of algorithmic failure by way of being the largest is very little.
Right. More developers working on that chain or on that software makes it easier. Another thing to think about too, the folks that have Bitcoin, if you sell your Bitcoin for cash, it is a taxable event, right? So you would have to pay taxes on that. Their capital gains could be significant. Another problem we'd like to try to solve is figuring out a solution where you're able to leverage your Bitcoin with a trusted third party, not like some of these internet companies, right? I wouldn't trust them with holding your Bitcoin. So you can borrow the collateral of your Bitcoin, and when you're using those funds for a business purpose, any interest payment you make is also tax deductible. So if you're going to borrow money on your Bitcoin and buy a car, that's not tax deductible. But when you're investing in real estate, for example, those interest payments would also be tax deductible. And then once you have money coming in from the rents, then you're able to pay off this loan and get your Bitcoin back. Right? So that way you're not actually selling your Bitcoin, you don't have a capital gain, and you still have some income, some, secondary income from an investment property.
There are ways to structure crypto to crypto sales, provided they are done in a very specific manner. Again, I do not represent anyone. Contact your accountants and or lawyers. But there have been multiple private letter rulings from the IRS affirming 1031 exchanges for specific types of on-chain crypto transactions, similar to how football players are traded via 1031 exchanges.
I have a question for the panelists. And since this slide says fractionalization of ownership, let's say we have you identify a building, Matt, that you can manage, and it's $1 million building with 5 units, for example, good cash flow, and then it's purchased outright, but then people can buy a fraction of that ownership. That's kind of what we talked about, to allow people from out of state to own a piece of New Hampshire, a piece of the Free State.
Yes.
How does it work on the first level of investment, and then the second level? Kumar has talked previously about something like a secondary market for these tokens. Can you guys kind of walk us through that?
On this slide, I went back to the single family home. This kind of gives you an example of a breakdown of ownership, you know, that is kind of fractionalized. These are just examples to show you how it can be broken down, what percentage of ownership you would have. But you could have 300 people all coming in and buying into this one property, and depending on how many people you have would determine the actual ownership percentage that you have. So one real estate deed can be fractionalized into an arbitrary number of your choosing. It could be 5,000 or 500,000 units of a crypto token or an NFT, for example. So there's 2 different vehicles depending on what blockchain you do want to use. We would like to set up a marketplace, you know, a online website where you can sign up, you can see the investments, and then you could buy into these shares at that point. The secondary market, I'll let Kumar talk on.
So from a regulatory standpoint, either way we look at this, the SEC has taken the unfortunately firm view that these tokens are unregistered securities. So we would have to, the token offering would have to be under various exemptions. However, we have multiple rulings in different circuits stating that secondary sales of these securities are not considered securities offerings. They don't meet the common enterprise of the Howey test and cannot be regulated. So as a tokenizer, I take the position that I am selling unregistered securities functioning under various exemptions, but whomever owns these unregistered securities is free to sell them to whomever they wish. And that is not regulated.
Wow. Can I follow up on that? This could be a fun twist for PorcFest.
Yeah.
So for example, Kumar, if I'm one of the original investors in this syndication or this purchase in the DAO, and I own, let's say, $50,000 worth of this investment, and you're doing par.
Oh, I think you're.
I unmuted myself. So say it's dollar per token initially for 610,000.
Yeah.
$50,000 investment. I own 50,000 tokens in this example, and then I go to PorcFest. On the secondary market, I can sell tokens to friends, right? If they come up to my tent, I can say,
yes,
hey, you want to own a piece of the Free State for, I mean, $10 maybe a bad example, but $100 or $500, you buy that small fraction of this awesome income producing property that rents to free staters.
Yeah.
Is that right?
Yes. There is one glaring warning sign saying that you, just like super PACs, you cannot collude with the original person who made the offering to do this. The secondary sales has to be off of your own volition, but other than that.
Interesting.
Secondary sales really cannot, even physically, they cannot be regulated just based on all the decentralized exchanges out there.
This hits close to home because of the library court ruling. And you guys can look that up separately, but they busted library, but they said all those tokens that were already issued that are on now in the secondary market are not regulated by the SEC, I believe.
And for folks who want to look that up, that's LBRY library, and that was a New Hampshire based, or is a New Hampshire based crypto company that was trying to do really cool stuff. The SEC evil. But what I'm hearing is everyone who is on this class needs to buy a Pork Fest ticket so that you can come to the Porcupine Freedom Festival and come find out more about this. And maybe apparently Mark will be hawking tokens from his website. But more seriously, to Mark's point, part of the reason we're doing this is because we do believe that, the future lies in New Hampshire, that there really is opportunity here, and that we think that every libertarian and every anarchist and every liberty lover and every Ron Paul supporter and anyone who thinks things are a little weird out there should be owning a piece of New Hampshire, because we are building the freest place on earth. And it's time for us all to bandy together. We understand not everyone can or wants to move here. Apparently, some of you like to sweat. But up here, we like our winters and we like our mild weather. But we want people to be able to invest and build the future that we imagine, that we believe and see is coming. And so that's why we're pretty excited. We've been thinking about these things for a long time. We've been talking about them for a long time. Yep. And it feels like there's this coalescing truly of the tech with the will, with the housing shortage. If we can just get the interest rates down a little bit, or figure out the way where it isn't such a big influence, which I think is part of this play as well.
Absolutely.
And not to mention that even if individuals are not considering moving here or considering moving here in the long term, parking assets in New Hampshire New Hampshire has the best trust laws in the country, and especially after FinCEN's odd little crackdown on shell corporations, New Hampshire's trust laws have effectively mitigated that to.
And that's a really good point, Kumar. And this sort of is tangential to that. But of course, also, we have no sales tax in New Hampshire, and there is no personal income tax either. So you're just beholden to the federales. But we actually have no dividends and interest tax anymore. That will taper down to 0 by 2026. So when you're thinking about what we're trying to do here in New Hampshire, in the Free State, think about it as really like, we're building the future Switzerland, and we're kind of saying, hey, who wants to get in on this potential? Because people are looking for places to save their money, as we go on this path towards a sort of darker future. We want to give the light, we want to give the hope, we want to be the people who are saying, hey, there are solutions to these problems. Let's figure it out, and let's leverage a trust community to make cool things happen.
Absolutely.
All right, so now next slide.
Well, I think we're pretty much wrapped up on our slides. So the QR code, if you do scan it, we'll give you information, or basically you'll sign up for when the prospectus is ready. You'll get that. I really want to make sure we have enough information in there, give all of our options, have a little bit more information on the DAO and how the bylaws would work. And then we can get that out to folks. But now I think is a good time for questions, if anybody has any.
And to be honest, I was supposed to be fielding the questions from my desk at home, but as we can see, we have a bit of an issue. So either feel free to unmute yourself, or if we can check the chat.
I have a question. So I think this sounds interesting. I actually invest in some REITs, but it's something similar, but it's not blockchain related. Fundrise does something like this. So where they basically have certain funds that have blocks of properties. So do you have any ideas of like how you would structure this? Like, is it just investing in individual buildings or individual investments? Or are you thinking of having a fund that has a block of things, and then there's a kind of levels of which you can kind of invest in and all and such?
The legal structure, would primarily depend on, well, New Hampshire does have a DAO bill, House Bill 645, making its way. It passed the House, it's making its way through the Senate. If this bill were to be passed, this would be organized as a New Hampshire DAO, the easiest way to do it. If not, in my experience, I've set up various trusts that hold the particular property, group of properties, whatever securities I have tokenized, and said that the primary beneficiary of the trust is the private key holder corresponding to XXX public key.
And
Okay.
what we would do as far as the investment goes, New Hampshire is a very different market than, say, Indianapolis, where they have a lot of multifamily properties. They have 1,000 units in one small geographic location. That's much different in New Hampshire. We have a lot of multifamily homes that are 2 or 3 units. So to get our proof of concept, we would want to start small, prove that it works with a small group of people. And then as we prove it, we can create a much larger fund for people to get into, and then tell them ahead of time, like, hey, this is what we want to do. Here's our plan. And then have a roadmap for that.
Perfect. More questions, folks?
There's a question in the chat, Carla.
Okay.
I'm going to stop the screen share.
Okay, yes.
Hopefully everyone can still hear us.
This is above my pay grade. I see a chat. I see it. I see it. Over there. Yep. Here
There
we
we
go. All right. The question is, I'm aware of a Michigan blockchain effort,
Realty.
Realty, that tokenizes things, but is centralized. It pays dividends directly on chain. Oh God.
Gnosis.
Gnosis chain. Have you thought about a direct to wallet payment of yield? Someone translate that for me, please.
Oh,
And then
Actually, I do have a very strong opinion on this. I keep telling everyone we spent not this, but the past Bitcoin cycle tokenizing pictures of apes. Just because it can be tokenized does not mean it should. And by tokenizing, in this case, property needs to yield distinct advantages, such as decentralized governance, level 0 clearing, and whatnot. Most of these projects, all they do is just shift the center of financial gravity from, let's say, from the clearinghouse to this one corporation, which does not really meet the goal of decentralized finance.
So with these companies like Realty, they are making the decisions on what properties to get into, and then offering you a buy-in, so you can buy a certain amount of tokens to then get a return on that. But they're still making the day-to-day decisions ultimately. Whereas like in a DAO, you would have more responsibility for what happens at those properties than you would at Realty. It is possible to receive rent payments on a blockchain and have the DAO read the address to confirm that it's received a payment. Based on the rules, the bylaws of your DAO, you could then have that rent payment forwarded amongst all of the individuals that are holding the tokens. So that is entirely possible.
okay, thank you for that question. Other questions in the chat, feel free to drop them there, or feel free to unmute yourself if that's possible, and just shout out.
Yeah, can I?
Hi.
So is this in any way reliant on the Keith Amons HB 645?
That's what we're basing it off of, yes. So we are hoping that this does get passed before June, when the legislators are out of session. If it does not get passed, there are alternatives running similar to an LLC. It just doesn't give as much flexibility as what we'd like to see.
And that bill has passed the House. I believe it's in front of the Senate currently. I think a lot of us are, keeping quiet.
I mean, so the primary advantage of this bill would be it extends the concept of limited liability. That is, if I'm a shareholder in Apple and someone sues Apple, my personal assets are not on the line. It extends that to various tokens and just affirms that right. Whereas in most states, that does not currently exist.
Kumar, there's a question in the chat. Does a token holder receive a K1 or receive a tax deduction?
So again, it depends on how the DAO is exactly structured. Because of the very fungible, flexible nature of these tokens, if, for example, the token was structured closer to a C corporation, an independent entity, all the accounting would take place at the corporate level, and there would be a fixed set of tokens as dividends or cash paid out to the holders. If it would be structured as some sort of pass-through entity, then the accounting would have to be done properly.
As I understand HB 645, the DAO would be a pass-through entity to the individual. So then you would receive
Yes.
a K1 as an owner of that DAO, correct?
Yes.
That's how I understand it. Yeah. But it could be structured differently, right? So we could set it up where but a C Corp or a DAO is owned by a C Corp, which is owned by a trust, right?
But the larger issue, the larger benefit, which we all, because we're libertarians, we think it's a benefit. Many authoritarians hate the fact that because this is a decentralized project, we have to take responsibility for our own tokens and our own dividends. At the end of the day, if we are getting dividends in various tokens, even on the secondary market, the question is, where would these K1 forms be sent? Who would these forms be sent to? We have to take the responsibility saying, this is our income, put that on our books. And similarly with taking an active role in the DAO, saying if we're voting for whatever proposals, we have to be educated enough, learn about how the organization functions, which actions are profitable and which are not.
Okay.
I think we have a follow-up question there. How does the return on investment of a new construction compare to buying an existing old property?
When I ran the numbers, so the single family example that was up there was 11% return. Buying a duplex that is brand new, the first year your return would be around 8 or 9%, so a little lower, but still pretty good. The benefit about buying a rental is that you have the recurring income year over year. And buying brand new, your expense ratio, you're at about 25% expense to income versus a multifamily, which was built 120 years ago, has an expense ratio of 50% to income. So your expenses are much higher just because you're trying to track down leaks in 100-year-old buildings because you don't know who did what to what pipe 70 years ago. So there's a lot more labor involved in these older properties, and buying new or building is really much more beneficial at this time. If interest rates go back down to 2.5%, maybe we look at things differently.
Okay, and here we have, I've been involved with DAOs for years, and many are so decentralized and successful, for example, Dash, but others are chaotic and struggle. What are your initial thoughts of managing it? Centralized initially and then decentralized. Sounds like the Free State Project.
Well, you have to have some form of centralization, otherwise nothing would get done. So when we have boots on the ground, who's going to be the one actually buying the property or talking with the title company? It's not going to be every single person who's part of the DAO. It'll be a small group of individuals who are looking over, and then they will be delegating decisions to the DAO, right? So we have a general set of rules that we want to see. This is the building we want to buy. Okay, do it. Now, when a tenant stops paying rent, you have the options to evict or try to work out a payment plan. So typically an owner is going to want to make those decisions or delegate it to the property manager. So that needs a vote, right? So there's going to be some back and forth initially. It's going to be centralized initially. And then as we start building more rules that can be put on chain, then it becomes more decentralized over time.
And with the eviction, that's the way of the owl, not the DAO. Anyone else want to drop some questions in, or feel free to unmute yourself and ask in real time?
If not, we're always happy to take questions by email afterward.
And what is perhaps, guys, the best way for everyone to reach you? I forget if that was on the slide. I believe it is at the end there. Oh, here we go. Oh, is it true, Kumar, that you have experience actually doing tokenization of assets?
Yes, I run an asset tokenization firm. My special right now, most of the demand is for various derivatives and securities to create synthetic pairs that would probably not be possible otherwise. So this is really my first real foray into real estate and real property.
All right.
Very cool. That's so interesting. I mean, I hope folks are feeling much like I am, that we're learning things. It sounds like there's a fair amount of experts here, which is always good. But it is exciting to kind of be doing something new, maybe not to have all the answers, but to be like, you know, there's a success story here as well, where you think, okay, we had a free stater who introduced a bill, we were very, very early in New Hampshire with crypto, and it's encouraging and exciting to see that we're, adding these extra things. So here we go, we have one more question. What are the biggest risks with regard to this being a new investment vehicle? Could the investments go the way of library? High risk, right?
Yeah.
Yeah.
The risk is actually, I'd argue it is a lot lower than most traditional investment vehicles, precisely because of the transparency it provides. Now, if I were in the business of, instead of making tokens, traditional securities, it would be an effective black box, and all the client would have to go off of is trusting me. With a DAO, everything is on the chain. Additionally, let's say, for example, SEC raids us, we just spontaneously disappear. The tokens still exist, which are backed by the property. So you still own your share of that property, regardless of what the token issuers do. So the DAO can reconvene, have a motion, vote to do something with it. And that transparency allows the fungibility of these assets.
I saw a hand up. I thought if anyone has a question, just jump on in.
All right. Has anyone looked into governance platforms, or Kumar, you said you've tokenized other things, but I'm thinking, Aragon is a project that comes to mind that I haven't tracked in years, but is on the Ethereum blockchain, and just curious if there's like a first step to doing like a Ring B network version of it, where we can test with the platform and kind of just get some assurance to people that the interface to the DAO would be comfortable enough for the person that's not, for the layperson to use, so that everyone can participate.
Carla can use it. Everyone.
Yes. Will it work for Carla? That's the question. Will this be easy enough to work for Carla? Is my question.
So here I speak from my experience again in tokenizing derivatives. What I have done as a firm is we've integrated it into traditional, let's say, Bloomberg terminals, icons, whatnot. So these assets would just appear as any other asset on whatever portfolio to management, chat, data tool that they use. I would hope we should be able to do the same thing for real estate, to say this is just going to be another asset in what they can see in their portals.
Right. So HB 645 does require a graphical user interface. So anybody can essentially read the DAO in common language, right? Rather than whatever programming it's written into. I've spoke with a developer recently who would be interested in the project, trying to build something out for us. So all the end user has to do is log into this website, and you'd be able to see the rules, you'd be able to see the proposals, and you'd be able to see all the transactions that have happened within that DAO. So yeah, that's something that I am working on, and hopefully middle of the year, I can have something to try to have people break.
I guess you partially addressed that. I'm a bit weary, but we can talk about it later of from scratch solutions. But Kumar, you seem to say that there's existing financial product, or not financial products, but software for this kind of stuff. Would that include the voting and things like that on chain voting and whatnot, or?
Yeah, so all of that can be defined in a REST API, which integrates well into, let's say, in my case, Bloomberg and Icon. But in this particular use case, I would recommend using a free platform like TradingView, saying, look, most people are on TradingView. It's free. You can log on, see what is going on. Everyone is familiar with it. It's not some sort of foreign platform.
Thank you.
Okay, great. We are knocking up against the hour here. I want to make sure that anyone who still has a burning question is able to ask it. Otherwise, I'm going to suggest any last thoughts from all our knowledgeable speakers. And then we'll share some contact information. And I think, it's just really important to keep this conversation going. Kumar, someone has a very pressing question to know what other kinds of assets you have tokenized. I heard you say derivatives.
Yes. So let's say, case in point, up here, our energy is incredibly expensive because we use the Brent standard instead of the West Texas Intermediate. If one wanted to speculate on the cost of West Texas Intermediate crude and various byproducts being brought up here, what I can do is essentially take WTI futures, refinery rights, and transport contracts, put them together into a token. So if you wanted to speculate on how much we're paying versus how much we're paying with West Texas Intermediate or various other oil indices, you can do that. So I call them synthetic commodities, because those trading pairs would not really exist in real life.
Oh, fascinating. So maybe I'm gonna just put a wish out here, here in New Hampshire, because you mentioned energy costs. We do have a nuclear reactor. I like to mention it because people seem to forget about it. It is something that actually most of the energy is exported, but maybe in 10 or 15 years, we can build or own our own nuclear reactor with some tokens. So I say always dream big, and then we can see if we can get from here to there. Maybe not tomorrow, but maybe one day. Any last thoughts, gentlemen?
Thank you, everybody, for joining us. We appreciate it. Again, if you have any questions that are burning a hole in your brain after this, please reach out to us. We're happy to help.
Carla, thanks for monitoring this, and thanks for the great panel and people who joined tonight. We've identified the problem out there, which is lack of good housing and lack of good housing for porcupines. So instead of just talking the talk, we're going to walk the walk and provide a solution. That's what this is all about.
Awesome. Thanks, Mark. Kumar?
Yep. That all I would recommend is read the fine print. Just because, I hate to be that guy, but we just went through an entire crypto asset cycle where these tokens were essentially black boxes in the back and everyone invested just because they are tokens. And it diminished the entire industry as a whole, and that is what I would not want to see happen. I want tokens to get their deserved reputation as solid instruments of finance.
And I think that's a really great note to end on. I think that is part of the value proposition of what we're all suggesting here is truly that we are old friends. There's a bit of a trust circle here. This is a community of people with like-minded values. You know, our reputations precede us. All of those things count when you're doing business. And so it's both exciting, but, you know, it's also fraught with risk. It is, you know, high risk, high reward, all of those great things. But if we continue to have this conversation, I think the future here in New Hampshire and in the Free State looks bright. So thank you all for joining us. Feel free to reach out anytime. And we look forward to talking to you about this soon. Thanks, guys.
Take care.